Welcome to the 77th episode of Kanga Crypto News, your weekly briefing for fast, reliable updates from the crypto world. My name is Kuba, here to walk you through the latest developments and the stories that matter the most. Before we begin, a quick reminder, every episode of Kanga Crypto News is compiled by our expert Kanga analysts using reliable sources only. Please note, however, that this is not an investment advice. We publish new episodes every Friday, so if you want to stay on top of the most important crypto news, subscribe to the channel and then tap the notification bell so you never miss an important update. And now, let's kick things off with Wall Street, because it just got ultra bullish. Citigroup raised its Bitcoin forecast, saying the token could climb to 231k within a year. Even its base case sits near 181k, and it expects 132k by year end, a fresh all-time high. Ethereum got love too, a 7.3k bull case with a 4.5k year-end target. Citi's reasoning: ETF inflows softening US labor data and the digital gold narrative. With rate cuts on the table, October could again live up to its October legend. Meanwhile, in Tokyo, Metaplanet hit its Bitcoin goal. The Japanese investment firm bought over 5k Bitcoins this week, hitting its 30k mark for 2025. Average entry, 108k per coin. Paper gains, roughly $300 million. Funded by stock sales and bond redemptions, the move pushed its stock up 12.5%. Metaplanet now ranks 4th worldwide among corporate Bitcoin holders, behind only Strategy and Marathon. Speaking of Marathon, it kept staking, and not just the stats. The miner now holds almost 53,000 Bitcoins worth $6.4 billion after adding 373 BTC in September. It has mined 736 BTC, a 4.4% monthly rise, while the hash rate hit a zettahash per second. At the same time, it bought a 64% stake in Axion, an AI and HPC firm backed by France's ADF. Marathon is morphing from a miner to AI compute utility, a blend of Bitcoin and cloud power. Then came the Solana moment. VisionSys AI, a Nasdaq-listed firm, announced plans to stake up to $2 billion in Sol, starting with a $500 million tranche via Marinate Finance. It's a rare move, a listed company building a staked Solana treasury while testing intelligent DeFi integrations with its AI stack. Risky? Sure. Sol's volatility is no joke, but it marks another shift in how corporates handle digital reserves. Stablecoins quietly broke their own record. The sector's market cap topped $300 billion, up 6.5% in a month, boosted by the US Genius Act. Tether dominates with 58% share, followed by USDC with a 24.5%, then USDE and DAI. Citi thinks stablecoins could hit $4 trillion by 2030 and handle $100 trillion in annual transactions. The takeaway? Stablecoins are now infrastructure, not a niche. ETF fever meets paperwork overload. Rex shares and Osprey funds filed for 21 new crypto ETFs, covering everything from Cardano to Sui, most with staking features. They're using Cayman subsidiaries and may allocate 40% abroad through firms like 21 Shares and CoinShares. Defiance ETFs joined in with leverage products tied to crypto and big tech. New SEC rules are fast-tracking commodity trust shares, but with a government shutdown, the backlog's piling up. Things are getting wild, said Bloomberg's James Seyfarth. And that is an understatement. In other news, Bitcoin finally did it, $126,000. The King coin printed a new all-time high, with open interest and liquidity both surging. ETF inflows, corporate buying, and rate cut hopes lit the fuse. Standard Chartered's Geoff Kendricks sees 135k next, while BTC dominance crossed 55%. Fear and Greed Index firmly in greed. BNB has also joined the party. Binance's coin hit $1,200, a record high, even as $5 million in shorts got wiped out in 24 hours. Funding rates stayed positive since July, showing consistent bullish bias. Analysts warned that after this parabolic rally, profit-taking could drag prices towards $700 by December. Still, sentiment has flipped from months of caution to full-blown optimism. Grayscale blurred another TradFi DeFi line. It turned on staking for its Ethereum and Solana funds, at first for US spot ETPs. Now, investors can earn staking rewards without touching private keys. CEO Peter Mitzberg called it first mover innovation, saying Grayscale will expand staking to more products soon. In short, staking just went Wall Street compatible. And finally, Paul Tudor Jones sees fireworks ahead. The billionaire compared today's AI and crypto surge to the 1999 dot-com mania, only more explosive. He expects a massive rally before a late-stage blow-off top, driven by rate cuts and deficit spending. His playbook: hold Bitcoin, gold, and Nasdaq tech through year-end. JP Morgan agrees, calling Bitcoin undervalued with room to run toward $165,000. The mood: euphoric, but with a warning. The biggest gains come right before the fall. The overall vibe: it's peak optimism season. Wall Street's raising targets, corporates are staking billions, and stablecoins are printing new records. The short-term risk: overheating. The long-term story: institutional rails are locking in, and crypto's becoming part of the macro machine. That's it for today's Kanga Crypto News. If you enjoyed the episode, give it a thumbs up, share, and subscribe to stay current with the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.